Hello, I'm Natalie Kenway, Global Head of ESG Insights at ESG Clarity, and welcome to the Green Dream video series, where we interview key members of the responsible investment industry. Today, I'm joined by Simon Holmes, Director and Portfolio Manager of BMO Global Asset Management's Sustainable Universal Multi-Asset Portfolios. Thanks so much for joining me, Simon.
Thanks for having me on.
So when was the Sustainable Universal Multi-Asset Portfolio range launched? And can you tell us a bit about the asset classes that are invested in?
Yes, so the broader range we've got, which is called the Universal range, that was launched in October 2017. So that's about 3.5, coming up to 4 years old now. Now within that, we have the Sustainable Universal range, which is a part of that bigger range. That was launched at the end of 2019. The bigger range, the full range, has got over £1.1 billion in it now, and the sustainable part of it is almost at 200 million. And within that range, we've got 5 different funds, and they each have a different risk target to make it easy for investors to see which one suits them best. So we have defensive, which is the least risky, cautious, balanced, growth, and adventurous. And they each have different combinations of the main asset classes that we use. So that's sustainable global equities, sustainable UK equities, and sustainable corporate bonds. And we also use government bonds to help manage the portfolio risk.
Fantastic. And would you say that that sustainable element is gaining traction now? And why is it important for investors to have access to low-cost, sustainable multi-asset portfolios?
Well, I certainly think it's gaining traction. I think it's been absolutely huge over the last few years. And even in the time since we designed this range, which is only about 3 years ago or so, it's gone absolutely, completely much more mainstream. And in terms of what we think is important, so the range itself, the broader universal range, is about active management at close to passive price. And we also bring that into this sustainable part. But the sustainable part is so much more, for me anyway. I really believe, and as do the rest of BMO, that we want to be able to let investors invest in line with their values, make positive impact, and still be able to meet their financial goals. So that was the main reason that we created the sustainable part. Within it as well, I think another desire for us is to improve simplicity for investors. And increasingly in the sustainable growth, you get many different types of ESG investment. And we felt that was becoming a bit confusing. So what we've done is we've created a simple framework for us to make it easy for us and then for investors to follow, which we call Avoid, Invest and Improve. And under that, the avoid part is about avoiding doing harm. And in our case, we won't own any companies in tobacco, weapons and fossil fuels. We won't own companies which have poor conduct either. Under invest, which I think we'll talk about more in a moment, but that's really about the positive side. So how do we invest for a sustainable future? What are the right areas? What are the right companies? And that's where most of our time is really spent, on that positive bit. And the improve bit of the avoid, invest and improve is about engaging with companies. So we own those companies, we're deploying that capital for our own investors. So we need to take the role as stewards seriously, and that means talking to their management. Even if they have a wonderful product, perhaps they could do some things a bit better. So that's really the full-on proposition for us. It's low cost, it's active, and it's sustainable. And what we hope is that makes it easy for investors to invest in this way.
Thank you for explaining that. Couldn't you tell us a bit about the key trends or themes that you're investing in right now?
Yeah, so for me, in that avoid, invest and improve framework, this is digging into the invest part. I think it's a really interesting area. And for us, we start by thinking about sustainability globally, and we use, along with many others, the United Nations Sustainable Development Goals. And there are 17 of these goals, and they cover many areas. And underneath that, there's a whole range of targets. But the key point for me is it's been estimated that we need trillions of dollars to be invested every year to have any chance of meeting these goals. And what that means is a lot of opportunity for our investors to be able to invest in companies helping to meet those goals. So we took those 17 goals and we boiled it down to just 6 core themes. Some of them are obviously sustainable when I say them. So healthcare, for example, efficient use of resources, and then the transition to clean energy. But I think more broadly, what this really is becoming about is taking our global system, our global economy, our capitalist approach, and making that appropriate for a sustainable world. So that means we have to bring in problems like pollution or how to avoid it. We need to think about how do we finance companies. That needs to be done sustainably. We need to think about what we will do for work. So whether that's goods or services, how does that become sustainable? And finally, we think about sustainable cities. So where do we all live and how do we get from there to work? How can we do that sustainably? So whilst the first 3, healthcare, resource efficiency, and clean energy, are very specific and obvious, these last 3, finance, working, and living, making that sustainable is really where I think most of the opportunities are going to be over the coming years.
Great, thank you. And are there any areas that you find it difficult to invest in? There just aren't the products there at the moment?
Well, I would say that, first of all, there's been a sort of evolution over several decades. I think BMO, in its previous guise as F&C, had the first ethical fund, which was launched in 1984, and that was UK equities done ethically. But since then, in the equity side, it's really grown. So we've got lots of global products and UK products, for example. And so I'd say that the equity side is not so difficult. What I would say is there are some parts of the broader asset class mix that are more challenging. High yield debt, for example, and high yield is more dominated by traditional energy. That's therefore a bit harder to do in sustainable way. And for us, what we do is we just focus on investment grade credit and make sure that if there is a name that looks good, that we could include that. So that would be one area, I think. Also, emerging market debt is an area that traditionally people might have in their asset mix. And for us, we haven't gone to that point. We'd rather do what we do in a sensible and sustainable way than go to that area. But from the equity perspective, because we've got good, strong teams with sustainable credentials, good at stock selection, we're not held back by that at all.
Great. And can you tell us a bit about your outlook for the responsible investment space? What do you find exciting, and what are the challenges and opportunities for a manager like yourself?
Well, I think there are both opportunities and challenges from trying to keep sort of on pace with the rate at which things move. Often things that may have seemed a good way to do things in the past suddenly become challenging. At the same time, our understanding of what is the right way to approach things, that evolves. Take, for example, drinks, where people would have said before, okay, various fizzy drinks wouldn't be very good from a health perspective, so why don't you all go and drink water? Well, now you have to think about, where do you get that water? Are you taking plastic bottled water, or are you just going to carry around your own water bottle? That's a simple example. And for me at BMO, I'm really lucky because we've got a big responsible investment team. So they're always looking at different aspects of what's going on, trying to update our thinking in terms of what we should or shouldn't be looking at, what should we be worrying about. But it also means they can find great opportunities. So in terms of sort of what I'm excited about, there's many companies we have. To give one example, there's a company called DSM. It's a Dutch company which gets most of its revenue from the nutrition business unit that it has. And what they have, they're trying to address the problem that livestock farming creates a huge amount of methane, which then contributes to the whole sort of greenhouse gas emissions. And livestock across the world make roughly the same amount of emissions as cars. So that's a pretty big problem. And this company, DSM, they've got this product which they call the clean cow enzyme, and that halves the amount of methane emission without any side effect. So in that product alone, that will have a significant impact. It will also be worth a lot of money to that company and then obviously to our investors. So it's a great example of where something is done which is good for the world and is an opportunity to invest and meet financial goals.
Fantastic. And we always end the Green Dream with this question: what is your favourite sustainable drink or snack?
Okay, well, I can think of quite a few things. I mean, there's obviously some nice wines out there, and I really enjoyed having this Beyond Burger that I had recently, and it was much better than I thought it was going to be. But I think my answer here is going to be, I was thinking, well, what do I actually do round about the place since we've all been in lockdown? And things like going and picking blackberries with the children, or we tried to grow some tomatoes. They were delicious. It had a terribly low yield in terms of how many we actually got for all of our efforts. But I think that sort of thing I found really interesting. So I'm going to pick the delicious tomatoes that we managed to grow at home.
Amazing. Thank you for sharing that with us, and it's been great chatting with you.
Thanks for having me. It's been a pleasure.